Batter up, baseball season begins, and so does earnings season. What's up, everybody? Welcome aboard to Bubba's Bottom Line, and we've got the baseball season now already started, as it started last Thursday, and of course, already some exciting things happening. But of course, starting next week, we've got the earnings season, so we'll call it batter up. And I guess the question is now that we head into a new month and a new quarter, what do the markets have in store for us now? Well, we take a look at the last quarter. What did we see? We saw the return of volatility. We saw the market starting to break down. We saw the high, which we called here on January 29th as a blow-off top, and the markets have started to work their way lower since. And we think that that continues. I think that looking forward into the second quarter, what you have here is a market that's going to continue to see a lot of volatility. I think you're going to see the markets continue to go lower. I think you're going to see a lot more trouble in tech. And I think this is just the start. As the Carpenter used to sing, we've only just begun. And again, this does not say that if you're an investor, you should dump and run away from the markets. This just means that there's going to be probably some pain inflicted in here. There's going to be some issues within the markets, but there's there's a lot of good reason for it. But I think, as you look back at last week, I think what do we start to see now? Volume is very heavy when the markets are going down, very light when the markets are going up. We had a big rally on Friday, which kind of failed late. Thursday was the rally because Friday we were closed. We had a big rally on Thursday, which kind of failed, even though it was up, but it was on about half the new normal volume. So that is something that we look for, and we will continue to watch for as the markets start to turn. But again, you expect to see these vicious rallies in a market that is starting to head lower, and I think that's what you're seeing. Higher volatility is here to stay. We're going to see some action, and we're going to see a lot of things happening in the world and in the markets that are going to say, well, wait, that can't be right. And of course, it is right, but this is what happens now. It's obvious to see that the advisors and the pundits are begging for these markets to go back up again. They are not looking at the facts, and the facts are very simple. Earnings are fairly artificial based on the lower interest rates. And until we can start to see those things start to pick up, we're going to continue to have the same types of issues. So have the markets already pre-priced everything in going into this new quarter? And my answer to that would be probably. I think that the markets are a forward-thinking indicator, and I think now that we're starting to catch up, I think you're going to start to see the markets go the other way. I think you've got a much bigger correction coming. I think it'll be much bigger than anybody expects it. And of course, the bull market was longer and much deeper than everybody expected it, so why would we expect it to change? One of the things we look at from the market standpoint is what is going on and what does it look like. So what do we see here? Well, we've had stocks flying at ridiculous multiples. Now, again, everybody's going to say, well, the multiples were not that high. Well, when you factor in the low interest rates, the multiples are really ridiculous. Again, we cannot continue to survive with interest rates as low as they are. It does not make sense. You have forced in an entire population into an equity market that doesn't want to be there. You don't think they're going to stay in once we start to see the rates go back up. So I think that's something that is an issue. I think when you look back at the bond markets now, the bond markets are in bear markets now. They've got, they had a little bit of a rally late last week, but you saw the 10-year try to push above 3%. Now you're getting a natural sale. Remember, interest rates, stock markets, flea markets, any market, they all trade similarly based on price discovery. And they all trade the same based on what the buyers and sellers want to do. So you're going to see that there's going to start to be, the sellers are going to, I think, become more aggressive. I think we've seen that with every rally that we've had over the last 5 or 6 weeks. You have seen the sellers come in with a more aggressive posture. And I expect that to continue. I do not see any reason why they will not continue. You're already starting to see some of the breaks in the armor of Tesla. There's been some now calling for Tesla to go out of business, right? To possibly file for bankruptcy. Now, again, I don't necessarily subscribe to that, but I have said and I state that Tesla is still way overvalued. Love the car, love the technology, but you cannot continue to operate at a loss, which is what they're doing. So Tesla has taken a major haircut from its recent tops and is now trading around the 250 level. Now, to me, that is still well overvalued, but again, I wouldn't say that it's time to jump in and sell. You're going to see markets move back and forth. So these are just warning signs, okay? You look at Facebook. Facebook had their big announcement and it was negative about your privacy and about you being the product and the whole deal. Well, that anytime you give up your personal information, you are subject to that type of treatment. But now you see Facebook. Now, the thing I'm talking about here is that if the markets were as strong as everybody thinks they are, then Facebook would have been able to push away that bad news and at least maintain. But Facebook itself is in a bear market. Tesla itself now is in a bear market. Amazon is now working its way down into a bear market. So you're seeing a lot of things that are changing throughout the tape. You're seeing more new lows made than new highs. So again, ever so subtly, you're seeing changes. Now, again, is that a bad thing? The answer is no. It's not really a bad thing. Markets are going to have to go through some sort of a selling thing. That is what we always look for. But what you're starting to see here is we're starting to have a credit crisis again. We're starting to have a liquidity crisis again. Not to mention some of the other things that are going on that are not healthy for the overall economy and for the overall market. And I think one of the things we look at is the way that the stocks act when they start to go down. All right, you get these vicious spike back rallies, but then they go down and make a lower low. And I think that's what we're going to see here in the equity markets. If you look at the trajectory, we're like this now, okay? And we're going to spike up to a level and then start to work our way down. That is the natural order of trade anyway. So again, it should not be of any great surprise that since the market is up 300% since the bottoms, that there would be a correction. So I don't think that there's a reason to believe that we should think that a correction is not going to be a part of what happens. Okay, so now as we look at some of the things that are going on, Under Armour, okay, has been compromised in part of their things as well. All right, they've given up some personal information. Now again, I don't think that we should be overly surprised about this. I think what you're looking at here now is a more of something that's going to be more of the new normal, where our data is going to be compromised. Remember, the more that we put out there, the more that's going to happen. So I wouldn't take that as dramatically bad news, other than the fact that your personal information has been compromised. But it's been compromised already between Target, Equifax, Yahoo, Facebook, and others, and ones we probably don't even know about right now. So I think that becomes an issue. I think that, you look at this and really what you should be looking at is, if we do get this big correction, which I think we're going to get, it probably should be looked at as a potential buying opportunity. Again, for those of you that have listened to me in the past, you know that I don't think that the overall markets are going to collapse forever. Again, I'm not a perma bear. I'm actually a perma bull, knowing that if you can stay in the equity markets or you can hedge yourself to stay in the markets, then you're better off staying in than trying to pick and move. And I think that's one of the fallacies that we see when people start telling you, well, risk on, risk off, move here, move here. Why not stay with good, solid companies that you assume are going to be in business, and then you can see your own growth and your own potential work higher. And I think that is something that is extremely important to understand, that trying to guess which sector or what is going to happen next, instead of being equally diversified throughout and being able to stay in the market, that meaning that you can only invest money that you're not going to need tomorrow. I think that is something that is important as well that we look at. And of course, you have a debt problem here. You have a debt bomb coming. All right, you cannot continue to borrow money and to spend money that you don't have. All right, this has been the government and the Fed solution, is to try to borrow their way out of debt and continue to push forward by printing more money and trying to generate. Now, again, I've used this example before, but I think it's important for everyone to understand. See, their theory is that they can continue to kick the can down the road, that the dollars they're borrowing today will be paid back with cheaper dollars later, right? It goes back to the Magic Johnson basketball contract when Dr. Dre Buss gave him a $25 million, $1 million a year for 25 years, knowing that the value at the end of the contract would be nowhere near the right value, and that is how this is trying to play out. We know that that does not work out. We know that that is a farce and an imagination of a ridiculous Keynesian economic theory. This is the problem you have when you try to live off of theory. This is the problem that you have when you let people that have no understanding of how a business operates and how an economy operates through real life, not through what we all learn in school, through basic economic theory, but actually how it really works when you really have to make a hard decision. And this is where we continue to have the overall problems, and this is where the problems are going to come back again when we finally get to the top and the end of this move. That's where the ugliness is going to come, and there's so many signs that are pointing there that it's amazing. But I mean, if you look at some of the things that are happening, and look at just some of the turmoil with James Comey and with the FBI and with McCabe. You know, by the way, McCabe somehow raised $400,000 on GoFundMe. Now, again, explain to me how this all happens. But again, these are all things that we ignore. Okay, but as you started to notice, bad news has now become bad news, and this is only just the beginning. Okay, this is just the start of some cracks in the armor, some bad news starting to show up. And again, I'm not telling you to run and hide and to sell everything. I'm saying to be prepared for a change in the market. This is a great time that if you should decide to learn how to hedge your portfolio. There are ways to do it that can actually generate and compound your portfolio faster if you're prepared to do so. But I think that, again, trying to run to gold, trying to run to some of the other asset classes is not the right way to do things, because, again, the growth and the compounding effect that you get from the stock market can be beat by none other. Okay? In the meantime, this is Bubba's Bottom Line. Todd, Bubba. We're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line after the break. What's up, everybody? Make sure that you help me out with my high school investing program if you'd like. And that is, we are right now in about 450 high schools, and we're trying to get into, obviously, every high school in the country. We do donate the program to them, trying to teach our youth a little bit of financial literacy. And if you'd like to help us out, you can help us out at Patreon, patreon.com/Bubba Trading. That's Patreon, patreon.com/Bubba Trading. And also, don't forget to get the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. And on Tuesday this week, we got a very special guest, Stan Larimer from Cryptonomics, and he's very big into the cryptocurrency world, so you can tune in and listen to that interview. It's going to be great, and Stan's extremely bright and well-versed on the subject. So if you have interest in the cryptocurrency world, make sure you get the Bubba Show Tuesday. Now let's get back to the show, and welcome back to Bubba's Bottom Line. And of course, as we talked, that we're going to have Stan Larimer on the Bubba Show. We do see a crashing and a crushing of the cryptocurrencies. Now, again, I don't think that that's any real big deal. I think that's part of the natural order of markets. When you get so juiced up and you move so fast, then a natural solve comes out. You now have the panicking coming in. This is telling you that the markets are now probably coming near a bottom in this cryptocurrency space. Now, again, like any other investment, okay, if you're going to invest, understand the risk of the investment, not just that it's going to be free money, because it's not free money. So I think if you do believe that you want to get involved in this space, understand that you could lose all your money, which is why you never want to take a huge portion of your portfolio. Any investment you make like this should never take more than 3 to 5% of what you're willing to risk, because again, it could go to zero. Now, it could go to $1 billion, and if you were in early, you could have made a lot of money already. But I remember hearing the stories, and this is one of the reasons why we're going down so hard, is when we were at 20,000 Bitcoin, for example, and I heard people talking, and even people that I interviewed on the Bubba show saying, well, I'm not selling, it's never going down. Well, that was the first sign that the market break was starting to come. So this is what you start to see. So now you start to see the flush of all the weak hands, and you'll start to see, I believe, some new money come in and lift it off. But the Bitcoin crash and the crypto crash is accelerating. You see Ethereum down under 400 and the Bitcoin in the 6,000s. But again, it's going to be it's real, it's going to be spectacular, and it's going to be part of everyday life. So again, understand it, learn it, and again, don't take all of your money. Take a little bit if you'd like, and get involved in the cryptocurrencies, because again, they're going to be around for a while, and you're starting to see some change, and again, you're starting to see some acceptance of the mining, okay, of the coins as some of the actually national currencies for some small countries. And I think this is only going to grow as we go forward. And as much as China says it's bad, they're trying to ban it, in all of their hidden cities, they're mining away like crazy. So again, remember, what you read is not necessarily the factual, the truth of what's going on. In the meantime, in the agricultural world, as we continue to say right here on Bubba's Daily Update and Bubba's Bottom Line, was that the selling into the report last Thursday was well overdone, and that it was a great opportunity to be a buyer of corn, wheat, and soybeans. And of course, they all popped pretty good, especially corn. Corn was at 14 cents on the news. I think that corn will make new highs. I think that one of the things you have to be prepared for is you have to continue to understand that there's going to be some pressure, some selling, and you want to look for the levels to buy. What we're looking for in general, if I break down all of the markets, equities, I want to sell into rallies. And I just don't want to sell to sell. I want to sell into a resistance spot where I think that that's the end of the rally. I have a legitimate target, a legitimate footprint. I want to sell there. In the grains, I want to be a buyer of support. So I want to see a sell-off, and I would expect to see some sort of selling pressure this week just because of the big movement. Not because I'm negative, but I think that presents a buying opportunity. I think when you look at the meats, they were looking like they were bottoming, and then all of a sudden we had this progress buying report, and they just got crippled right after the report. Now, again, the high price of grains did cause some of that, but I think that this was more of a blow off to the downside. Looked to be, I think we look for a spot to step in and be a buyer there now as well. Again, you never want to overinvest into these markets, in any market, because again, we just don't know where the bottom is, and you don't want to be forced to make that overall decision. All right, so you want to make sure that you're watching what's going on. I think that oil is a sale. I think that gold sits in this big range from 1,300, 1,310 to 1,365. We saw last week, and if you read what I wrote for Kitco all week, that upper end should probably fail, and of course it did. Now again, that doesn't make me right all the time, but what I'm saying is that's until it breaks out of one of these levels, one way or the other, you can assume that it's going to stay in the same trading range, which is just a big old consolidation pattern. I think when you look at oil looks like it's starting to finally give up the ghost as well. And again, there is really no purpose for oil to be at these prices, because at the end of the day, what do you have? You've got oil in backwardation, which means that it's being driven right now by fear. I think that's something that you have to look at as well, okay? Now, I think that when you start to look into some of the problems that are starting to occur, you've got a lot of issues within the banking industry with the debt. You've got an enormous amount of bad debt out there. Now, we continue to ignore the debt. We continue to ignore what's going on because, of course, we all assume that the Federal Reserve is going to save us again. And again, I think that that's something that we have to get by. We have to get through this and understand that that's not the case, that the real facts of the matter is that the Federal Reserve, with their policies and with their willingness to print money and with their willingness to let these deficits get bigger and bigger, is really a detriment. And really what we're doing is we're selling our future. We're selling our souls, okay? This goes back to things from the creatures from Jekyll Island. And I think this is going to cause a lot greater damage once again. You know, we've seen these major meltdowns, and I think we're just in the first inning of another major meltdown. And when I come back from the break, we will go into my commentary as to why I think this is happening. This is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break, and we'll be back with more and my commentary after the break. Remember, Tuesday on the Bubba Show, you can catch Stan Larimer from Cryptonomics. He is the CEO, and his son Dan is building a new cryptocurrency, EOS. So make sure you check that out, 4 to 5 Eastern at libertytalk.fm, and also highschoolinvesting.com. Check it out, see what it looks like. If you'd like to help us out, you can go to patreon.com/Bubba Trading and make a small donation. If you do, I will give you a free week of my futures recommendations. You can check it out and see what you think and if you like it. And now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz here, and of course, I always get my commentary in. And since we are, 9 years since the great bailout from our friends at the Federal Reserve, 9 years. Okay, what has happened? Median income has barely moved. Okay, so we can hear about all the great jobs numbers as President Obama reported and as President Trump reports. Income is up 5%. The markets are up 300%. Income is up about 5%. Now, that is hardly enough to keep up with inflation. So we've got income, which has not at all improved. Okay, public debt has more than tripled since the great meltdown. Okay, think about that for a minute. Public debt has tripled. Credit card debt is at sky-high rates. The average American cannot borrow money from a bank. I got into this dispute with some writer, some economist writer, about why it's unfair, okay? And of course, the proof, as they say, is in the pudding. Because the wealth distribution model has shown that the wealthy have picked up all of the loose ends while the classes below have gotten poorer. So you can see, obviously, that this has very much to do, if you've ever read The Creature from Jekyll Island, if you've ever understood about how the Fed works, if you ever have listened to Ron Paul and Ed at the Fed and these other people that are anti-Fed and because they want true free markets, this is exactly the plan that they thought would happen, is to continue to wipe out the lower classes while the rich get richer. And this is just another example. These are pure number facts. This has nothing to do with the Fed today. The numbers are the numbers, okay? The upper 1% has picked up about 8 to 10% of the value of what's going on here. So when you look at the overall picture, you obviously see that we have not done what we should have done, and we have not created a free market. We have created a manipulated market that the Fed controls, that really only benefits the wealthy. This goes back into the regulations, and we're going to talk a little bit of Facebook here because it kind of ties in together. The big banks like their overregulation on the little banks because the big banks have already been through it. They can afford to go through whatever, and they don't have to deal with the regulators. Facebook is now in that same position. They're so big that Zuckerberg welcomes regulation. Why? Because it keeps competition from catching up to him, because he's there already. He's already done it. So now regulation would only benefit the size and help Facebook get even bigger. This is the fallacy that we live on when you live in a system that you continue to burn your todays or your tomorrows for today. And that's one of the big issues here. But it's as clear as you can see that wages aren't stink, which we've been in contention at all the time. I still say that for the most part, we are still in somewhat of a recession for most middle-class Americans. All right, and I think that's a problem. And this is where we need to get these jobs to be good jobs. This is where we need to get back to some fair and equal distribution and destroy the oversized regulations that keep small business out. This is where we need to get the banks to actually lend money to the average guy, the small business who really builds this country, instead of just feeding the big guys. These are the issues that are at hand today, is that we do not have a fair and equal system because the banks don't have to lend out to the average guy. And again, I'm not saying that they're wrong. I mean, we want to lend to Amazon, or you want to lend to me? I mean, obviously we know the answer, but that's where the system has failed us, because it eliminated the free and fair practice where the little guy can get in, because now a little guy in business has to either use his credit card or go to a predatory lender or one of these outside lenders that are going to be at much higher rates. So already the competitive balance is off. And that is the true thing we don't have, is we don't have competitive balance in our system anymore because of what the Federal Reserve has done with the dollar, with the monetary system, and by bailing out the banks in the first place. And that is it for Bubba's Bottom Line. This is Todd Bubba Horwitz. Everybody have a great week. I hope you had a great Easter. Thank you so much for being here. We will see you back, well, we'll see you tomorrow on Bubba's Daily Update, but we'll also see you back next week here on Bubba's Bottom Line. Thank you so much, everybody. Happy Easter, happy Passover. We'll see you next time.